Okay, recording this video after close of trade Wednesday, 3rd of November 2010. And before talking about the markets, we had the extremely sad news today that Andy Irons, 3 times world surfing champion, died at the incredibly young age of 32, either of dengue fever or a methadone overdose. And he was an incredibly talented surfer. Photograph here of him surfing in Tavarua in Fiji. You can just see he was a real power surfer, just beautiful the way he could draw lines on waves. I think he did win 3 world championships. Would probably have won more if he hadn't had the misfortune of being, born close to Kelly Slater, who kind of frustrated Andy Irons so many times in contests. But anyway, so extremely sad news. He's actually a resident of Kauai, where my wife and I try and spend our winters, and so I'm sure everybody in Kauai is incredibly saddened by the news today. Let's talk about the E-mini. Extraordinary things happening in the market over the last few days, and the reason for me not posting was I was convinced last Wednesday that we were going to have a bounce at the end of last week. If I just show you my 40,500 tip bar chart, this was last Wednesday's activity, and we had all of these professional blue bars, 1170 down here buying the lows. The week prior we'd seen them all buying at 1160 down here. Professional blue down bars kind of buying on the lows, same thing here. And we had a pop during Wednesday's trade, and I thought that was just going to keep on going. And Thursday's and Friday's activity was difficult for me, to say the least. We kind of fell back into the 1170-75 type zone, and then on Friday we went absolutely nowhere. Monday's and Tuesday's trade was just violent, and then we had the FOMC today. So I found the last few days very difficult trading, and that's probably one of the reasons over the weekend I was starting to have some doubts about the way I was seeing the market. But that's the reason for not kind of posting over the last few days. Having said that, though, let me just talk about today's activity. 2 million contracts traded. We had FOMC in the afternoon, and a whole bunch of we had all the political news and all of the economic news coming out in the morning. 2 million contracts traded, but this was kind of the activity in the afternoon. 1.2 million contracts traded in the last hour or two in the market, and we've had this kind of bullish break up towards 1200. However, let me just raise a couple of points here. First of all, just want to talk about trend lines. Don't usually show my trend line charts, but the last couple of days, this is Wednesday's the daily chart. Here, these are the last kind of trend lines that were plotted by a better trend line here, just showing that Friday and Monday's activity, we had this congestion. We've been in an uptrend for so many weeks, and then we had a congestion signal on better trend line. And we've broken to the upside now, closing above the trend line here. So, supposedly we could be breaking into another uptrend. But just bear this in mind. A lot of traders kind of looking at trend lines like this, and trend line breaks can often just start to reverse. We kind of break to the upside, get up to 1200, 1205, 1210, hit a whole bunch of stops, and then kind of the professionals kind of reverse it and take it down. So just be aware of that. But we did have this kind of congestion zone, and so we're expecting some larger moves, some volatility to come out of the market. And then just to recap, this is my average trade size chart, and Monday's and Tuesday's activity, believe it or not, ended up being extremely high average trade size with these kind of professional blue bars kind of painting. And when you get professional blue bars kind of painting at new highs, just watch out, because that's showing that professionals are starting to take profits. And I'm just going to show you 2 kind of previous highs that we saw on these charts. So this one is going back, let's see, this is back at January 2010. So we had kind of coming into these highs, a whole series here of professional blue bars, large average trade size up here, and then the market, at these new highs, the market kind of dives. The second pattern we had kind of here, this is April 2010 again, we've got professional blue bars, a couple of them here. First of all, we get kind of amateurs kind of pushing up, then a couple of professional blue bars, signaling at these highs, and then the next push up that we have is driven by the amateurs up here. And then the activity that we've got at the moment, we've had a couple of professional blue bars coming up to the 1200 type level. And that's kind of interesting to me, and I'm kind of watching that thinking, I wonder what's going on. This is what really kind of got my interest though today. When we break this chart down to the next time frame, the 135-minute chart here, you can see again professional kind of blue bars last couple of days kind of trading at these highs. But then all of that activity at the end of today was on low average trade size, lower than average kind of trade size. These are amateur kind of being taken out of their positions. So, just I'm being very wary about saying that we're going to the uptrend is got a long way to go and we're going to continue up. I could well see us kind of pushing forward over the next couple of days, hitting a whole bunch of stops. 1200 psychologically is an incredibly important level. Hitting that level, going a little bit beyond it, finally kind of getting exhaustion, and then starting to reverse to the downside. So that's a hypothesis that's possibly I'm thinking about. Bond market, 30-year bond market. This is the 30-year interest rates on the daily chart. Now, with today's news, with the FOMC and QE2 kind of news, the bond rates have started to really diverge. The long rates are going up and the short rates are going down. But this is what happened today, and I was talking about this cyclical turning point here when we had long-term rates down at 3.6% kind of down here. We've kind of broken up to 4 again, and then with today's activity, huge volatility on the 30-year bond contract, and then the interest rates kind of doing this incredible spike kind of back up above cyclical resistance and potentially into an uptrend. So let's just talk about some of these kind of long-term charts. This is the 30-year bond contract. I mean, I just don't know how you could have traded this today. We kind of got into, this is all of today's activity. We went up to 133 on the 30-year bond contract. Then we had a Rambo's, kind of signal right at the highs here. And then this thing, I mean, it collapsed 3 points in a day. It's just unbelievable. We were kind of making a low back here. We'd had our flush signals here, a final exhaustion selling signal, kind of amateurs down, being wrong-footed down at the bottom here, and then this market starts to take off to the upside. But then we kind of back down at this 130 level again, a lot less selling kind of going on. So I just don't know what to, it's too early to call to say what way this market is going. So I'm just going to wait for a couple of days and to see where the professionals get active. The last time we can see kind of concerted professional activity was back up here at the highs, taking profits on these up bars, bearish divergence signals and so on, and the market kind of goes to the downside. So until we start to see where the professionals are starting to play on the bond side, it's very unsure of what's going to happen there. But in some of the commodity markets, things are becoming a little bit clearer. So this is a copper market here. You can just see the last couple of times we've kind of come back into these lows. You can see these professional blue bars active at the lows here. End of trend warning signal, exhaustion selling, kind of risen back up, and then on this pullback down here, professional blue bars kind of coming in at the lows here. Bit bullish divergence, very little selling happening at this point here. So potentially copper starting to take off. If we look at crude, I've been talking about crude being in an uptrend, and you can see crude had a really nice kind of pattern when we were testing $80 and $81. All these professional blue bars back here 3 weeks ago, coming into these lows, exhaustion selling and so on, and then we come back in, test again, very little selling, come in again, and a third time professional blue bars there again at 81 and 81 again, a flush signal, exhaustion selling signal, and now the market's kind of broken above cyclical resistance and went into an uptrend. So I'd expect to see this move start to slow down once we see professional up bars. The last move today, the professionals were active on this test back down at the 84 type level down here. So professional blue bars down active at the lows. We had the breakout out to 85 and a half, come back in to test. Professionals pick it up here, and the market seems to go up. So this is kind of all talking about kind of the inflation trade. So higher commodity prices and so on, and that could be why the long bond rates are starting to go up.